Welcome back to Market Making Monday. This is episode 23. And if you're new to Market Making Monday is pretty much me breaking down currency pairs week by week and teaching new traders exactly what the market is doing and the potential move in the upcoming week, as well as trade entries for that upcoming week. So if you've been struggling, Market Making Mondays will make things a lot more clear for you, give you clarity on your charts, and help you week by week to learn how to trade. So with that being said, you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this one. Going back to last week, if you watched Market Making Monday episode 22, I clearly broke down the chart once again. Like the consistency in the work that shows week by week. So if you haven't been watching Market Making Monday, I suggest you go back and watch the episodes, because it literally shows you step by step. Like every week I say this is going to happen, and for the most part that's what happens the following week. And I give you guys the setup actually as well. So these are my personal opinion, but if you do want to take that risk and take that chance on the trade that I'm showing you guys week by week, that is your own choice. So last week, simple chart breakdown. You go back and watch Market Making Monday episode 22, where I said we had this low over here, this 4-hour low, and we're gonna come back and test this area. And what did the market do? It retested this area, a bit of consolidation for a couple of days, actually for a week, and then today the market broke down, hitting the negative 27 extension level. So it's pretty simple. All you need is your Fibonacci tool. All you need is the low and the high, or the high and the low. It doesn't get more simple than that. And once you know market structure, then you know that you have your directional bias, and you have to know the higher time frame bias. So this was last week's trade of what happened, and I said it was going to happen the week before. Now let me show you exactly how I came to that conclusion real quick. So if you go on the weekly, you can see we're struggling to get above this level right here. 65500 psychological level. We're struggling. We had the three drive, 1 drive, 2 drive, 3 drive, each time taking out the higher highs, and then we had a push to the downside. All right, during that push to the downside, we had this low right here. So the market will make higher highs and higher lows. So higher high, higher low, higher high, higher low, higher high, higher low. So right now you can see this is the higher high, which is right here, and this is a higher low right here. So say this just comes down, which will happen over here. This right here is this right here. So that is a change of market direction. Once this low is broken, that is a simple change of market direction. So that is a quick breakdown of market structure, which also gives you directional bias. And if you want better breakdown of that, I have other videos talking about market structure and directional bias on this channel, so you could go ahead and check that out as well. So once we had this break of structure, you know we're going to the downside now, so we're going for sales now. So before we're going for buys, now we're looking for sales. So we retested this level right here, which the market loves to do. Once it breaks the level, it's always going to come back to retest that structure that was broken. So this last low was broken, so it's going to retest the last low before it continues on with the trend to the downside. Now that we hit the negative 27 extension, which I showed you guys, I'll show you guys once again. Negative 27 extension. You can see that the market is pulling back. So my prediction for next week, continuous movement to the downside. We didn't break this daily low, but I do believe for sure next week we're gonna break the daily low. Once again, weekly, we have this gap where the market needs to pull back. We've been on the upside for quite some time, and there hasn't been no real pullback in the market for New Zealand dollar. So you can expect a pullback down to this level where you only have upside movement and no downside movement. So the market needs to balance itself out potentially or eventually. Same thing with this. The market needs to balance itself out. There's only downside movement. There's no upside movement going up. So the market needs to balance itself out. So I'm expecting the market to break this level next week and potentially in the upcoming weeks hit this level. All right, so right now, if you check the weekly, there's 2 hours left on the chart, and right now as I'm recording this, it's Friday, February 17th. When I upload it, it's obviously going to be on Monday. So as of right now, you can see that if the market closes around here, which I think it will at the 500 level, psychological level, we're going to have this gap right here. So if you go to the 4 hour, I even marked off that gap where the gap starts with this orange line right here to let me know that this is the level that needs to be balanced at. We also have a gap right here on the 4 hour as well. So for me, I personally think that the market is actually going to pull back and fill that gap, taking out this short-term high. Reason why, if you pull the Fibonacci back, you can see that it tapped the level 38, but it did not, like, it wasn't on the level like this. So for me, I believe that it's going to come back, fake people out to think it's going to go long. The level to be hit will be not this 38. We could possibly hit the 38, but I do strongly believe it's going to want to come in and close this gap, tap it as well. It has the confluence with the trend line. We have the 4 hour moving average, and we have the 61 level right here, and we also have psychological level of 6325. So those are about 4 or 5 confluence in itself, and confluences is just reason for you to enter your trade. Stack on top of each other, give you more reason to enter the trade and give you more confidence to enter the trade. So yeah, so somewhere around here I'll be looking to take a short trade next week, and this is definitely going to take out the daily low right here. So yeah, so I hope that was clear enough for you guys to understand. It was just a real quick breakdown. Market Making Monday, episode 23. Make sure you guys like, share, comment, and subscribe. Hit the notification button, because week by week you're getting Market Making Mondays. And I hope you guys have a nice day, evening, or night whenever you decide to watch this video. I am out. Peace.